Yo, what's up? Welcome back to another trade recap. And today, um, February 10th, we got a break-even day. As you can see, -$3, which is just the fees and the like commissions and shit like that. So break-even day. Um, we got two trades. No, we got one trade, and it was a trade on the S&P 500, and it was like pretty nice trade. I could have taken a second trade, which would have also been a valid trade, but it would have been against my daily bias. So I didn't take that one. Like I don't know, it wouldn't have. Okay, but wait, I'm gonna explain the first trade first of all. So what did we have? We had on the like higher time frames before market open, we had two SMT divergences, right? One was this one right here, which got played out already before market even opened, right? By doing this here. And then we got a second SMT divergence right after, like not, it was right after market open, which was right here, this one. Bang, you can see. Wait, let me pull this away again. You can see as Nasdaq made a lower high with this move right here, while the S&P 500 peaked a bit above this high. I'm not gonna mark this out because the drawings will come up again, but you can see Nasdaq S&P made a higher high, right? So a bearish SMT divergence. Now we also had a 5-minute fair value gap right here. Bang, 5-minute fair value gap, which got no, wait, this isn't it. It was, goddamn, which one was it? It was, bruv, what the fuck? Okay, it was this one. Yeah, right. We had this 5-minute fair value gap, which got filled, right? Then we had the SMT divergence, right? So liquidity sweep, SMT divergence, and then we got a bearish reaction off of that. Now, if we go down, if we go further down to the 1-minute chart, we can see that we also had it was on a 15-minute, a 15-minute inverse fair value gap on the S&P 500 chart, right? So we disrespected it, came back into it, and yeah, okay, I already opened up the trade right after we disrespected it. So we disrespected it with this candle right here. This was my entry, and that was my entry. So pretty basic trade for value gap on Nasdaq, SMT divergence, retrace on Nasdaq also. I didn't mark this out, but it's also a retrace. Bang, you can see right here. Bang, and then on confirmation trades on the low time frame was the disrespect of the fair value gap on the 15-minute, and then also like change of character to the downside, as you can see right here, right? Change of character. This is a change of character to the downside. Bang, right here. Now, I entered the trade. I could have waited for the retrace into the inverse fair value gap, but I just put my stop loss above it because it was still a good risk to reward ratio and everything was fine. If I waited, I don't know if that would have made any. Probably have it had it here. No, I wouldn't have probably done this. No. So yeah, this was the right trade that I took. And then what happened was Nasdaq took out the lows, the London lows, which I targeted also on the S&P 500, right? We took out the London lows, and I actually planned, as you can see right here, behind entry when Nasdaq hits London lows. I actually was planning to close the trade right there, no, not to close it, put my stop loss behind entry right there, but I didn't because it didn't like, bro, it was on this candle right here, right? You can see it was just a bit below my entry, so that really didn't make sense for me. So I marked out another low. Wait, actually two more. No, another low right here, which was the one that was the pre-market S&P divergence. Bang, right here. Nasdaq made a lower low. S&P made a lower low while Nasdaq made a higher low. So I marked out the low on Nasdaq, which didn't get taken out, and then I waited for that one to be hit, which got hit, and this is where I put my stop loss behind entry. And then we got stopped out, as you can see right here. right on my entry. Bang. You can see, wait, you can see it right here. Wait, you can't. You can see the little arrow showing up right here when I go over there, right? So I got stopped out behind entry after this candle. Now, I could have closed the trade right here because, no, I couldn't have, no, because the SMT divergence would have been created. Okay, yeah, no. My thought was that I could have probably closed the trade after the SMT divergence was created by closing bullish, but the SMT was created right here and it was on a 1 minute chart, so it didn't really make sense. Now, right after this, so this was the main trade, break-even trade, right? Now, I made a mistake by entering a position on Nasdaq. I don't know how that happened. I just like was clicking around and waiting for a new trade, and I accidentally entered a trade right here. As you can see, closed it right after it, so 15. I actually waited a bit. Yeah, I actually waited a bit, so I'm break even again, which was kind of a gamble, but yeah, it's all right. So I entered, like I closed right at my entry again. Now, the second trade I could have taken was also my strategy, but it was against my daily buy. It would have been kind of against my daily bias because I quite didn't really know where market wanted to go on the downside. So we swept out these lows, right? Then we created a SMT divergence, a bullish one, on Nasdaq, and I could have taken a trade after a few more confluence. So we had the liquidity sweep as the first trade, as the first confluence. As the second confluence, we had the SMT. The third confluence would have been this perfect retrace of S&P 500 into a Fibonacci level, and like it wasn't really a fair value gap right here, but there was a inverse fair value gap, as you can see, bang, inverse fair value gap retraced into this, right? So we had some good high time frame confluences. The only problem was my daily bias, and I didn't know if I should already flip my bias. And then we also had this SMT divergence right here, so a smaller SMT divergence on a 1 minute chart. And at that point, I was like, what the fuck? I should probably enter this trade because after this change of character, it would have been a okay trade. But my problem was why I didn't enter the trade was because I wasn't able to manage my risk on this trade. So if I entered the trade and I would have targeted London highs, it would have been a 1, 2, 3, like a 1.3 risk to reward ratio, right? But my risk would have been insanely high. Like my risk would have been, I think I wanted to risk $90 and if I wanted to go into the trade, so buy one unit, buy one lot, no, buy one unit, which is the least amount I can buy, it would have been like $150 risk. So not nearly double, like 60% more, 70% more, something like that. Um, and that really didn't make sense to me in my mind. What I saw someone else doing online, it was PB Trading, PB Blake. You guys probably know him. He entered off of a 30-second inverse right here. There was like an inverse on the 30-second, but I don't have access to the 30-second chart, and I don't know if I would have taken the trade even if I saw this. So my second option, right? So we got this, and I was like, okay, I can't enter on this one. It goes against my daily bias. Kind of, I didn't know if I should have switched it. If I was able to manage my risk right here, I would have probably entered. Now the second opportunity was after we inversed this for 5 minute fair value gap, right? And then we would have got a pretty okay trade, right? 1.4 risk to reward, and then I would have been able to manage my risk too. But I didn't because I was like, okay, um, um, we have already taken out London highs on S&P 500, right? You can see, bang, at this point, S&P already took them out. And I was like, I don't know if I want to risk this much. Like, I don't know if I want to take the risk. I don't know if I want to go like this high risk. It wasn't really high risk, but it was like it would have been, the probability would have been not as good as it should have been. So I didn't take the trade. I ended the day right there. Um, I mean, it was a okay day. Nothing wrong with it. I risked, I think, $90 on the first trade. It was probably a bit less. So yeah, that's basically everything for the day. Hope you guys enjoyed. Hope you guys learned something. Blah blah blah, stuff like that. See you guys in the next one. Bye bye.